Hey guys, welcome to our channel Knowledge World. Today we'll be talking about an important topic which is insurance. We all know that anything can happen to us anytime in our life. Let it be ourselves, our family members, or our property. There's always a risk of loss or damage. Wherever we go, we hear people saying to invest in gold, land, flat, etc. because they give us huge returns in future. But many people forget to talk about insurance, which is a very important part of our life. So guys, today in this video we'll be discussing about insurance. What is insurance? What are the different types of insurances? Why do we need insurance? And many other topics related to insurance in this video. So guys, before we begin, subscribe to our channel Knowledge World and switch on the bell notification button so that you don't miss any new updates of our new upcoming videos. So guys, let's begin. Number 1. What is insurance? Insurance is basically providing protection against any future possible problems. It is just an arrangement to get a guaranteed amount for a specified loss or damage. So insurance is a contract or a legal agreement between an insurance company and an insurance buyer. The insurance buyer gets a specific amount of money as agreed in the agreement if he or his family gets injured or his property gets damaged. The policyholder has to give a specific amount of money to the insurance company. The amount paid by the policyholder is called a premium. The premium can be high or low according to the insurance you want to buy. The premium can be paid in installments, that is, you can pay it monthly, yearly or quarterly, or you can pay it as one-time payment. Number 2. Why do we need insurance? The world is full of uncertainties and risks. Individuals, families, businesses or anyone, all are exposed to different levels of risks and different risks. Let it be threat to life, threat to health or threat to property. There is always a risk. So it is always necessary to have an insurance so that you can be ready for any future problems. Number 3. What all things should have an insurance? Anything which will impact your life if it's not there and can undergo risk, all those things should be insured. Let us understand this more properly by knowing what are the different types of insurances. Number 1. Life insurance. A death can be expensive, from the funeral of that person till clearing all the loans the person had or paying his taxes. A death of a person can cause huge financial problems for his family. When a person dies, it is a very difficult period of time for his or her family as they need money to manage the house and to take care of their children, but they don't have since their income has stopped. So it is very necessary to have life insurance. So what does a life insurance offer us? When a person dies or gets severely injured, the family or the beneficiary, that is the person who has to receive the money, receives the amount of money which was agreed in the agreement. Guys, at the end of this video, I will be explaining to you about some of the additional benefits offered by the life insurance companies. So, who needs life insurance? Anybody who has dependencies, that is, his or her family is dependent on him or her, should have a life insurance. Number 2. Health insurance. You and your family are just one serious illness away from getting bankrupt. When you fall ill and get admitted in a hospital, you do not receive your salary as you are not working, so you cannot pay the already rising hospital bills. Nowadays, medical technology is improving and it will be very expensive for a person to get a treatment for him or his family in those hospitals. And in this situation, if a person has not done any savings, it will be a serious problem. And even if a person has done any savings, he or she might not be happy to spend their savings for paying these expensive hospital bills, as they might have saved the money for their future, like for paying the children's school fees. So it is very important to always have a health insurance for you and your family. While buying a health insurance, never forget to include all your family members, and when we talk about senior citizens, always buy a health insurance for them as early as possible, because once a person crosses a certain age, such as the age of 60, it is very difficult to get a health insurance for them. And even if any company agrees to give health insurance for senior citizens, again which is very rare, they will always charge very high premium because senior citizens can get infected by any diseases easily. For example, if you have bought a health insurance for like 3 lakhs and when you are admitted in the hospital, the health insurance company will bear your charges only till 3 lakhs and the extra costs have to be paid by you. So, who needs a health insurance? Everybody should have a health insurance because anybody might get infected by any disease or might fall ill anytime. Number 3. Vehicle insurance. It is always risky to drive your vehicle without any insurance. In India and almost every country, vehicle insurance is mandatory. In India, for electric vehicles with speed of less than 25 km per hour, vehicle insurance is not mandatory. But I suggest you to always have a vehicle insurance because you can't predict what can happen at what time. Anything can happen and always there is a risk of accident. If not from your end, there will always be a risk of accident from someone else's end, and when you meet with an accident, you will surely have a lot of expenses. Either you or your vehicle will be affected due to the accident, and at this time, if you had a vehicle insurance, then the vehicle insurance company would have taken care of all your charges. Not only you or your vehicle getting damaged, if the mistake was yours and you have damaged the other person or his vehicle, that time the insurance company will pay him on your behalf. So who needs a vehicle insurance? Anybody who has a vehicle, let it be a car, bike or a truck. Everybody should have a vehicle insurance. Number 4. Liability insurance. So firstly, what is liability? Liability means loan or debt. So imagine you are the only person who is earning in the family and you have taken a loan for something, and one day while going to the office, you met with an accident and died. So now your family has got an extra burden of clearing the loan you took, and they also have to manage the house. Even if you are not the only person who is earning in the family has to clear your loan with the same earning they were getting, and they also have to manage the house. In this situation, if you had a liability insurance, then your family wouldn't have to suffer after your death. So let's imagine you had a loan of 50 lakh rupees and you had made a liability insurance equal to your loan amount. So after your death, the liability insurance company would have cleared your loan. In this case, your family wouldn't have to suffer. But at the time of your death, if the remaining loan amount was only 20 lakh rupees, then the insurance company will only clear 20 lakh rupees. And it will be a loss for you because the loan amount cleared is only 20 lakh rupees, but the insurance you have bought is for 50 lakh rupees. So what can you do so that you get the complete amount? At this time, the insurance company gives you an extra facility of getting the complete amount. That is, the insurance company will clear the loan amount and they will give the remaining amount to your family or the person who has to receive the money. But for this facility, the insurance company will charge a higher premium. So liability insurance provides protection to insurance buyers from risks of liability claims and similar claims after their death or serious injuries. Number 5. Property insurance. So imagine you have a good house and a car, a well-settled job, and you have cleared all your loans and you're saving all the extra money you earn from your salary in the bank for your future needs. And suddenly one day a huge tree falls on your house and damages most of the exterior and interior of the house, damages your car and all the furniture in the house. So this is a new problem for you, as rebuilding the broken part of your house itself is very expensive, and on top of that you have to buy new furniture again for your house, and you also have to build the interior of the house again. So it becomes very necessary to have a property insurance. When you have a property insurance and your property gets damaged, let it be the interior, exterior, furniture or anything which you have listed in the list while buying the insurance. When it gets damaged, let it be by a natural calamity or anything, you will get the amount equal to the value of the property which is damaged. So property insurance provides protection to a person's property. The person receives a certain sum of money when his property gets damaged. It can be either by fire, earthquake, flood or any other means. Please note that you have listed all the content in your house while buying the property insurance. So who needs a property insurance? Pretty much everyone who owns expensive property should have a property insurance, because when their property gets damaged, the repair cost also will be very expensive. Number 6. Travel insurance. Everybody likes traveling, isn't it? But before traveling, make sure that you have a travel insurance so that you can deal with sudden expenses. If you have a travel insurance and while traveling, you fall ill and you get admitted in the hospital, at that time the travel insurance company will take care of your hospital charges. Not only that, if your luggage gets lost, you meet with an accident or a trip gets cancelled in between, the insurance company will take care of all your charges, but only till the insurance you have made. So if you have made an insurance till the amount of like 5 lakhs, that time they will bear your charges only till 5 lakhs and the rest of the charges have to be paid by you. So when should you buy an insurance? That is, by what age you should have an insurance. If we talk about life insurance, as soon as you start earning and people are dependent on you, that time you should buy a life insurance. Now if we talk about health insurance, no matter what age you are, you should have a health insurance. You might be a child, you might be a teenager, you might be an adult or you might be a senior citizen. You should have a health insurance, and if you are a senior citizen, try to get a health insurance as soon as possible, because as I explained to you at the beginning, when you cross a certain age, it is very difficult to get a health insurance. So if we talk about property insurance, as soon as you own an expensive property, you should buy a property insurance. And if we talk about liability insurance, I feel you need to have a liability insurance when you have a very huge amount of liability, say it as 50 lakhs or above that. So guys, now let's talk about some of the key factors you should focus on while buying an insurance. As I said to you at the beginning, at the end, I will be explaining to you about some of the additional benefits given by term insurance. Guys, when you buy a term insurance, you get the benefit only when you die. But what if you get permanently disabled after an accident but don't die? Or you get infected by a critical illness and don't die but you are admitted in the hospital? The hospital charges will be paid by the health insurance company if you have a health insurance. But still, you have to also take care of your family. So that's the reason why you have the option to choose additional benefits or additional riders while buying a term insurance. So what are those additional benefits? First one is critical illness. Guys, when you are choosing the critical illness rider, make sure that you are covering as much as diseases as possible. Try to go for insurance plans in which more number of critical illnesses are covered. Guys, it is better to cover as much as diseases as possible because you can't predict by which disease you can get infected and might lie in the hospital. So with this facility, you will get a lump sum amount before your death. You can choose a specific amount such as 50 lakhs, 60 lakhs or any amount according to your convenience. So guys, this is a good rider because you get one-time payment before your death and you can also manage your house and your family with the amount. Number 2. Accidental rider. When you meet with an accident and you come up with such a situation where you get such serious injuries and you can't go to work or you get permanently disabled, at that time you get a lump sum amount from the insurance company because you have taken this rider. So this is also a good rider as you can't go to work, you're seriously injured, you have to bed rest, and that time you get a one-time payment and you can take care of your family. But guys, if you want to get both these extra benefits, you have to pay a higher premium. But I would suggest you should go for it because your safety and your future matters more than money. Guys, one important thing you all should note down is that generally nowadays in most of the insurance plans, the premium way of benefit is always given in the basic plan in case of critical illness or permanent disability. That is, you don't have to choose this benefit separately. And even if you get an insurance plan for a very low price and this benefit is not there in the basic plan, I would suggest you to think twice before buying that insurance. The next point is what is the optimum insurance coverage you should take while buying a term insurance. Guys, you can buy a term insurance only till the extent of your remaining working tenure multiplied by your annual salary. Let's imagine your age is 25 years and your retirement age is 60 years. So your remaining working tenure is 35 years. Now let's say your annual salary is 10 lakh rupees and your remaining working tenure is 35 years. So your insurance coverage eligibility is 3.5 crores. You can also consider a 10% salary hike every year while calculating the insurance coverage if required. So with this example, you would have understood that your insurance coverage eligibility is dependent on your earning capability. So you can take a call whether you want to go for full coverage or less coverage depending on your necessities and your payment ability. But when you're going for less coverage, make sure that you're covering all your liabilities and necessities while buying the term insurance. Some people also go for over coverage, that is, they buy insurance plans with higher coverage. I suggest those people not to do it if not necessary or they don't have larger liability. Instead, they can invest the same amount in other investment plans such as mutual funds or any other bonds. Another important point is that bank will not provide insurance coverage more than the insurance coverage eligibility that was calculated. The next point is you should always check the reputation of the company in which you are buying the insurance. Check from how many years the company is in the insurance market and also see how they have performed in the previous years. The next factor you should focus on while buying an insurance is the claim ratio and the claim rejection ratio of that company. Claim ratio tells us about the total number of claims settled by the company out of the total number of claims received by the company. When you are buying an insurance from an insurance company, see to it that the claim settlement ratio or the claim ratio is above 95%. And also check the claim rejection ratio of that company. That is, how many claims are rejected by the company out of the total number of claims received by the company. The claim rejection ratio of an insurance company should be below 1%. Guys, the next point is you should always compare different plans with each other while buying an insurance. When you compare different plans with each other, then only you can get to know which plan is better, which plan gives you better benefits, or which plan is affordable for you. What you can do is you can go online and check the website of an insurance company from which you want to buy an insurance. There, you can compare different plans with each other and you can buy the best plan for you. Guys, after all this discussion, now you might be thinking, who controls all the insurance companies in India? Just like how RBI controls all the banking institutions and how SEBI controls all the stock exchanges in India, the same way IRDAI controls all the insurance companies in India. IRDAI stands for Insurance Regulatory and Development Authority of India. Whenever you are buying an insurance from an insurance company, check whether the company is registered in IRDAI, because in India it is mandatory for every insurance company to be registered in IRDAI. So guys, thanks for watching this video. I hope you found the video informative. If you liked the video, then give a like to this video, share it with your friends, and subscribe to our channel Knowledge World and switch on the bell notification button so that you don't miss any new updates of our new upcoming videos. So guys, meet you in the next video.